Welcome back to the channel, guys. I'm your host, Buckning, and today we are going to go through our buys. Today we're going to update the site trackerdividends.com. We're going to update share site as well. We're just going to go through the whole portfolio and show you the buys. But we are going to talk a little bit about my thoughts on the current state of the market and the question if we've hit the bottom or if we're close. And I could be completely wrong. We'll talk about the factors that come into play when it comes to the market performance and the state of the market. And so if you're new to the channel, welcome. This is where you put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here in the portfolio here, closing out at the end of the week at $11,944.83, up $198.65. Up 169 basis points, 1.69%. For the 1 week, we're up $86, up 73 basis points, up 0.73%. For the 1 month, we're down $668.97, down 5.3%. For the 3 months, down $1,437.90, down 10.74%. For the 1 year, we are down $138.72, down 1.15%. And for the all, we're up $788.88, up 7.07%. So today was a pretty good day here, I believe. Up 1.69% in this portfolio alone. So we'll go through the buy here, but as always, I just want to show you guys the fractional buy that we did here today in the Vanguard S&P 500 Index ETF. Closing out at $89.80, up $2.03 on the day, up 2.31%. Of course, every week we do a fractional buy of this. We made a purchase at $89.52, and we got 0.2792 of a share, and it cost us $24.99. We submitted at 25, but couldn't get that last penny, so $24.99 it is. The next purchase we made was in Bank of Montreal, ticker symbol BMO, which is right here. This is actually the second best performing position I have in this portfolio from when we started this. So we're going to go through it a little bit here. The number one position is actually quite surprising to me. It's actually Loblaws, which owns like No Frills, Shoppers Drug Mart, that company there. So Bank of Montreal, second best performing position in the portfolio, closing out at $123.16, up $1.23 today, up 1.01%. We now have 9 shares of this. Total position value of $1,108.44. Our average price of getting in is $98.43, and it holds about 9.37% of the portfolio. Today's return was $9.46, and our total return since starting this position is $222.54, up 25.12%. As you can see here, the yield is 3.92%, market cap of 79 billion, a PE ratio of 6.68. And yeah, pretty good. I'm pretty happy with this position here, but we did buy 1 share today at $123.54. And of course, no commission fee because it's Wealthsimple Trade and they don't charge one. And so those are the 2 positions we purchased today. Great performance on the day here, and we'll talk about that because it seems like there's some consolidation happening in the market, and I could be completely wrong. I'm just going based off of my emotions. Just kidding. So we'll head over to trackyourdividends.com here and go through this real quick here. Portfolio here is $11,662, up $879. Portfolio yield, if you were to build this portfolio without the updated positions, you would get a 4% yield. For us, it's about 4.33%, based on dollar cost averaging. Annual income sits at $467. So we'll go ahead and add a holding here. First one we'll add is VFV.TO. The amount of shares we got was 0.2792 of a share at the cost basis of $89.52. Go ahead and add that holding. Changes things a little bit. Go add another one, and we'll add BMO here. Bank of Montreal, not that one, .to. Bought one share today and we bought it at 123.54. Okay, so it changes things a little bit here. 4% yield, of course, $11,810 is the portfolio value. Our yield has gone down to 4.32%. Annual income at $472, as you can see here in BMO. We have 9 shares, price of $123.16 today. Our average cost is $98.43, profit of $222.57. Dividend yield right now is 4.32%. Our yield is about 5.4%. A 5% yield is fantastic. It's actually very attractive in that sense, and I wouldn't want to go any higher than that, but it's if it does, I know BMO, being a bank, is a very stable company. So annual income coming in at 47.88, of course, divided quarterly. VFV here, we now have 6.46 of a share. I just want to double check that one, make sure that's correct here. And I think it is, yeah, pretty close. Close enough. I think it rounds down and not up. But current price today was $89.80. Our average price of getting in is $96.32. So you would get a better deal today. Dividend yield is 1.23%. We're getting about 1.14. But we'll be dollar cost averaging that one down slowly but surely. And our dividend yield for the, sorry, not our dividend yield, our annual income from this one is $7.12. Of course, divided quarterly based on quarterly dividends. So that is trackyourdividends.com. Again, this site is completely free. Pretty fun to use. There's some features here I do like compared to other ones, and some other platforms are just missing. And so, yeah, moving on to ShareSite. This one we already updated, as you can see here, 9 shares of BMO. It's in there, and VFV, a bit more accurate, 6.4871 of shares there. So everything's accurate there. As you can see here, we're seeing some price action here, but capital gains, we're down 11.14%. So we're down $1,473.98 this year. Dividends, we've received about $187.96, which equates to about 1.42% of the portfolio. Currency gain, because we do own a couple US positions in here, $44.99, up 0.34%. And our total return this year is actually down $1,241.03, down about 9.38%. So, yeah, we're just going to leave that up there and talk about the market here and what I'm kind of seeing. Now, I don't necessarily know, of course, because I don't have a crystal ball, and I'm not going to pretend to be an economist, because it seems like everyone who is, every time the market's up, everyone's an amazing investor. When the market's down, everyone turns into an economist. And I'm either of those. And so let's just talk about what I think is happening and what I'm noticing in the marketplace. We are seeing some sort of consolidation happening. There's not this falling that's happening day over day, month over month, or just day after day, because month over month it has been happening. But day over day, we are seeing price movement going up and price movement coming down, and it's kind of consolidating in a way where it's flatlining, where it's kind of staying in this area. And I guess we can go over here and take a look here. If we look at June here, which is at the beginning of the month, it dropped down, and then we're kind of flatlining here. We don't see huge drops like we did back in kind of May there, but it came back up. And as we continue, there's just this, you might invest a little bit, it might drop, and then it comes back up. You invest some more, and then it drops again. So we are seeing some consolidation happening in the marketplace. Now, there are a few things that may be making this happen. And the market is not something that reacts to what is happening, but it is pricing in what it has already happened, or what we are expecting. What are investors expecting to happen? We know interest rate hikes are happening already. We know that it's going to happen. So it's priced into the market. And this happens both on the US side and the Canadian side of the markets. It's by no surprise that the market is not reacting as volatile as it did a few months ago, or even last month or the month prior, because now it's just expected that there are going to be interest rate hikes, that inflation is happening. Everything is being priced into the market. The market realizes that, and now we are seeing, hopefully, and I like I said, I could be completely wrong. I'm not an economist. I'm not going to pretend to be, but it's being priced in, and we are seeing some serious consolidation where it's not these huge jumps and these huge drops. It's staying kind of in an area where maybe this is the time. I was talking to another colleague of mine, and we discussed it, and he thinks the same too, but we're both not sure. It just feels that way after seeing last week and this week. You've seen kind of a drop, and your portfolio might have went negative, and then it came back up with all those gains. So it's kind of just staying in an area where it's not consistently dropping. And so that's my thoughts on it. So yeah, there's not a lot to go off of that. You can do your research, you can do your due diligence, you can go learn about how the market prices these things in. And I'm not going to go on a tangent about it, but that's pretty much it for the video, guys. Don't forget to leave a like and subscribe, and don't forget to use the link down below for the referral if you haven't already. If you are just starting out to invest or looking to, if you use the link down below, you'll get a free stock once you fund your account. Not the free stock, but the value of the stock. Put it in your cash account. You can use that to invest in whatever you like. Have a great weekend, guys. And we'll definitely see you guys in the next one. Bye.